Hello, everyone. Welcome to yet another episode on Stocker Team. Welcome to Stocker Team, the Investors channel. On this episode, we'll be looking at a landmark and watershed moment. Warren Buffett has just bought stakes in Google, which is basically Alphabet, the parent company of Google. And because Warren Buffett is bowing out after several decades of being perhaps the most sought after investor, the most respected investor, Warren Buffett's company, Berkshire Hathaway, is buying into Google as one of the most defining moments in tech. Is this really a new direction for Warren Buffett's company, Berkshire Hathaway? What does this mean for the entire tech ecosystem, the AI economy, the AI super cycle that we are currently moving into, and what does this mean to you as an investor? Before we go ahead, every information shared on this channel is for education and information purpose only. Do your due diligence or consult a financial advisor before making any decision. On that note, give this video a like, subscribe to our channel, put on your notification bell so that you don't miss any episode. And of course, this episode is proudly presented by stockertip.com, the platform for retail investors to get educated, get analysis, guidance, and how to build a sustainable and long-term portfolio. Let's jump right in. So last week, Friday, the news actually broke on Wall Street that Warren Buffett's company, as part of his exit, out of being actively the CEO of Berkshire Hathaway, has now bought a stake into Google or Alphabet. Alphabet is the actual parent company of Google with the ticker symbol GOOGL. The Class A and the Class B shares, just to be very, very clear. So, for the first time in quite a long time, Warren Buffett's company is now going to be investing heavily in a major tech company like Google. The company Berkshire Hathaway has now invested about $4.3 billion in Alphabet shares. The company actually made that filing last week. They actually bought those shares a while ago, but they filed it last week with the U.S. Securities and Exchange Commission, about 17.85 million unit of shares. So also, Warren Buffett also took some decision to actually reduce stakes in Apple. Apple is still the biggest shares or stock in the portfolio of the company, but roughly the stake of the company is now down to about 238 million units of shares in Apple, and they actually now have about 60.7 billion stakes in the value of the company's stake in Apple. So the company is not necessarily selling out of Apple. They are still in Apple. Apple is still the largest stake or the largest stock in the portfolio. But you as an investor, as an investor, what does this actually mean for you, for your portfolio? What does this actually mean for the big tech, mega tech ecosystem, the Magnificent Seven? What does this also mean to the AI super cycle that we are technically walking into? And even the whole argument about AI bubble, I'm going to be talking about 5 major takeouts that we need to actually pay attention to, and what we're actually going to learn, or what we can learn from Warren Buffett taking this position in Alphabet, which is Google. Number one, big tech is inevitable. So for so many years, Warren Buffett, Berkshire Hathaway has actually really been very, very conventional, very, very traditional, not joining the bandwagon, not buying into any major mega tech company apart from Apple. As a matter of fact, Warren Buffett even confessed that he never saw Apple as a tech company. He saw Apple more or less like a consumer electronics kind of company. He was able to understand the balance sheet. He was able to understand how Apple makes money and the fact that Apple sells a lot of products. So he didn't necessarily see Apple as a very, very innovative company, even when Apple is quite an innovative company, very revolutionary company in terms of everything that has to do with smartphone technology, computing, and so many other things. But he never really gave big tech a chance. But coming into Google now shows that at the moment, perhaps Warren Buffett has looked back, even when he's handing over the reins of the company to a new CEO, he has seen that the big tech is actually a place to be. So you as an investor, do you still see big tech as, the segment of the market that you want to avoid because you believe, the valuations are very, very overstretched, a whole lot of optimism built into the valuation? That's actually something for you to ponder on. Is big tech inevitable? Do you still see big tech, the likes of Apple, Google, which is Alphabet, Tesla, Nvidia, Amazon, and all the major big tech companies? Do you actually see them, including Meta, do you see them as inevitable? Do you see them as as stocks that you want to actually avoid because you believe they've actually run their course? But to Warren Buffett, my own takeout is big tech seems a bit inevitable, at least for the position or the future of the company. AI bubble, number 2. AI bubble is overblown. If you look at what Alphabet or Google is doing in the last 2 years or so, they've been investing almost as at the same level with the likes of Microsoft, with the likes of Nvidia, with the likes of even Apple in AI mega data centers, AI workload, hyperscaling infrastructure across the US and even outside of the US. Google has invested into so many other cloud providers, so many other partners within the ecosystem. So are we saying that there is still an AI bubble when the likes of Warren Buffett, who are very, very conventional, they're very, very traditional, value investing, is now actually a shareholder or one of the largest shareholders in Google or Alphabet? So I don't necessarily believe, which we've actually said over and over again as our position as Stocker Team, that the AI bubble argument is overblown and oversimplified. Also, the third lesson I believe is a key takeout is that whales in the market are not going to actually just play safe anymore. So the likes of Google, Amazon, Apple, even Microsoft, up until about 15 years ago, many companies don't necessarily invest in them. They were investing majorly in the likes of in the likes of Coca-Cola, in the likes of Procter & Gamble, Unilever, all of the consumer goods companies that people actually find it very easy to understand their valuation, to understand how the business actually run. But in the age that we are now, a whole lot of innovation has left fast-moving consumer goods industry. Many of the innovation that we have today that is actually going to change the business landscape, going to change the global economy, going to change how we actually live our lives as the entire humankind, is now really, really harped on technology, artificial intelligence, big data analytics, and how you can actually use that to drive productivity while reducing cost, while actually maintaining quality. So at the end of the day, a whole lot of whales in the market, institutional investors, pension funds, huge public and private hedge funds, are not necessarily going to actually play on the sidelines if the likes of Warren Buffett is actually tagging along to invest in a big tech like Alphabet. Also, the 2 last takeout is going to be very, very specific to Berkshire Hathaway, and the reason for that is this is a mega investor in the US stock market. So for Berkshire Hathaway to be going this route, is this actually the beginning of another era in the history of Berkshire Hathaway? We think so, but we also believe there is a nuance to that. So the fourth, lesson I'm taking out of this is that Berkshire Hathaway is not necessarily going to end this movement into tech with Google. It took Berkshire Hathaway, Warren Buffett, several years after investing in Apple, before they actually now made the decision to actually take a stake in Google. But I don't necessarily think they are going to actually just end with Google. I believe the likes of Microsoft might actually come into the play. I believe some other hyperscalers who actually now have a very, very easier to understand balance sheet, how they make money, what is the cost structure, what is actually the management of the business, in terms of what Berkshire Hathaway wants to look at. So I don't necessarily think they are going to actually stop with just Google or Apple being in the fray. The last takeout that I actually see is that Berkshire Hathaway is now a tech investor. So there is this very huge gap between the likes of Berkshire Hathaway and the typical tech investors, the Automata, the Sequoia of the world, who actually invest in so many other or so many tech companies that either some in private and some in the public market. But with Apple now in the frame, with Google now the latest stock in the portfolio of Berkshire Hathaway, I actually believe that this company can now be called a tech investor, taking up to almost about $4.3 billion dollar stake in Alphabet, in Google. That is quite substantial, and still retaining close to about more than 60 billion shares worth of shares in Apple. Berkshire Hathaway is a tech company. Why am I saying this? Why I'm saying this is, irrespective of where you stand, irrespective of the industry you want to invest in, maybe depending on your knowledge, your understanding, your risk appetite, technology really still has to play a very, very strong role, especially if you are looking to actually grow your portfolio in a more positive way. Even with all the volatility, Berkshire Hathaway's portfolio will now actually also feel the heat when tech actually takes a breather, the likes of Apple, the likes of Alphabet. So we are going to still go to the charts as usual, our tradition. But before we go to that, we will also talk about stockerteam.com, the website that's actually presenting this episode to you. So the aim of stockerteam.com is really to actually give investors the right information, analysis, coaching, and guidance. So check out stockerteam.com today. You can get access to up to the minute news on stocks moving the needle on Wall Street, a whole lot of analysis. We also have the daily brief that comes out every Wednesday, every Monday, Wednesday, and Friday, and you'll be able to get our guidance as to how we are actually playing the market, what we are learning in the market, what we don't necessarily want to invest in, and why, and exactly how we actually see the direction of the market. So check out stockerteam.com today and see how you can join and become a member through the membership plans that we have. So I'll be going to the actual chart of Berkshire Hathaway stock, and I'll also be making a final argument as to what I actually think is the direction for not just big tech, but for Berkshire Hathaway and everyone following this revolutionary company. So as you can see, Berkshire Hathaway stock, the Class B stock with Class B shares, which is actually very easier to track the performance of the company instead of Class A. You can actually see that this year has just managed to return about 12%, but with the inclusion of Google or Alphabet into this portfolio, we expect this portfolio to actually not just perform better this year, but actually start moving in line with the performance of Google. Google has actually invested so much more in AI, even higher than what the likes of Apple has invested in AI. Apple is yet to actually announce their investment in terms of how they want to actually relaunch Apple Intelligence, which didn't really come out better the last time they actually announced Apple Intelligence for the first time. So we expect Apple to actually use the 2026 to actually be a major year to stamp its feet in the AI side of things. But if you actually look at what Alphabet has done year to date, you can actually see the stock has actually done 46%. Yes, it lagged at the beginning towards the Trump tariff, but immediately Alphabet or Google was able to actually announce much more better results for is the usage of Gemini and all the Gemini linked application. Even search is not really declining as expected, as feared. So for me, I actually believe the journey between the marriage, quote and unquote, between Berkshire Hathaway and Google is actually going to be very, very beneficial, not just for Berkshire Hathaway, but also for the stock of Google. So if I want to play, I'll actually decide whether I want to actually hold these two stocks, or I actually want to just do one of them because of what I actually see and what you can see. So you still have to do your due diligence as an investor, and that's why we started stockatim.com, to actually provide much more due diligence, guidance, analysis, coaching for investors who are actually looking to broaden and build a very, very strong portfolio. So what do you think about Warren Buffett going into big tech with Google or Alphabet now in the portfolio of this company? Do you actually see it as a watershed moment? Is this a direction into tech? Is this huge institution, Berkshire Hathaway, going to be buying more tech company? Which tech company do you actually think will be the next, if at all they are actually going to add one more apart from Apple and now Google? So let me hear from you. But from what we can see, this is actually really a positive moment for big tech. That the likes of Warren Buffett is coming into the fray. Thank you so much for watching this episode. If you want more updates, more information, go to stockadmin.com. You can become a free member, and if you also want to get more coaching, more guidance, you can become a member and see the membership plans to actually join. And you can reach out to us on the WhatsApp platform and also via email. Thank you so much. Till next time, keep investing, keep growing, take care, and bye bye.